In 2005, Marvel executives walked into the high-rise offices of Wall Street giant Merrill Lynch and did something unthinkable: they pawned their superheroes. Today, the Marvel Cinematic Universe is the highest-grossing film franchise on Earth, generating over $30 billion at the global box office. But in the late 1990s, Marvel wasn't a Hollywood powerhouse. It was a dying, debt-ridden relic delisted from the New York Stock Exchange, bleeding millions of dollars a day, and torn apart by corporate raiders in bankruptcy court. To understand how Marvel went from 0 to 30 billion, you have to look at the catastrophic bubble that almost killed comic books entirely. In 1989, billionaire financier Ronald Perelman bought Marvel for $82 million. Perelman took the company public and realized collectors were treating comic books like stocks. Fans were buying 5 or 6 copies of the exact same comic just to keep them sealed in plastic bags. Seeing this, Perelman doubled down. Marvel jacked up prices, flooded the market with gimmick variant covers, and acquired trading card and sticker companies using mountains of high-interest debt. Then in 1993, the Speculator bubble popped. Collectors stopped buying. Comic shops shut down across America. Marvel's revenue collapsed, but their hundreds of millions of dollars in debt remained. On December 27, 1996, Marvel filed for Chapter 11 bankruptcy, listing nearly $700 million in liabilities. That's when legendary Wall Street corporate raider Icahn pounced. Icahn bought up distressed Marvel bonds for 20 cents on the dollar, aiming to take over the company and strip it for parts. Did you know that Icahn was defeated not by a media mogul, but by 2 toy makers? Isaac Perelmutter and Avi Arad ran Toy Biz, a partner company that held an exclusive license to make Marvel action figures. If Icahn dismantled Marvel, Toy Biz would lose its entire business. So Perelmutter and Arad waged a fierce 2-year court fight against Icahn. In late 1998, against all odds, the bankruptcy judge ruled in favor of the toy makers. Icahn was ousted, Perelman was gone, and Toy Biz merged with Marvel to create Marvel Enterprises. The company was alive, but its balance sheet was destroyed. To generate emergency cash, Marvel began selling off its most famous crown jewels to Hollywood studios for upfront fees. They sold Spider-Man to Sony. They sold the X-Men and the Fantastic Four to 20th Century Fox. At first, it looked like a win. In 2002, Sony released Spider-Man, and it blew up the box office, grossing $821 million. Hollywood was making fortunes off Marvel characters. But when Marvel looked at their royalty statements, reality hit them like a freight train. Out of that massive $821 million gross, Marvel received only a tiny licensing percentage, taking home roughly $25 million after deductions. Sony kept the rest. Marvel was providing the trillion-dollar intellectual property, taking all the brand reputation risk, and receiving table scraps in return. Avi Arad and an ambitious young executive named Kevin Feige realized that licensing was a trap. If Marvel wanted real wealth, they had to stop licensing their characters and start financing their own movies. There was just one problem: Marvel didn't have $500 million to produce movies. Worse, their top-tier characters, Spider-Man and the X-Men, were already locked away at rival studios. All Marvel had left were characters Hollywood considered B-list rejects: Iron Man, Thor, Captain America, and Ant-Man. In September 2005, Marvel made the ultimate high-wire move. They secured a $525 million credit facility from Merrill Lynch. But Merrill Lynch demanded massive collateral. Marvel signed over the theatrical film rights to 10 of its characters. If the slate of movies failed to turn a profit, the bank would legally take ownership of the Avengers. Marvel took that borrowed money and bet 80% of their initial budget on a single movie, Iron Man. They cast Robert Downey Jr., an actor Hollywood considered uninsurable at the time, and hired director Jon Favreau. On May 2, 2008, Iron Man debuted in theaters. It didn't just break even, it grossed $585 million worldwide. The gamble paid off completely. Just 1 year later, in 2009, Disney bought Marvel for $4.24 billion. That single slate of mortgaged B-list characters exploded into a $30 billion cinematic universe. The business lesson here is unforgettable. First, licensing your core IP creates quick cash. but building an integrated pipeline creates generational equity. Second, when you understand the true mathematical value of your assets better than Wall Street, taking calculated asymmetric bets is how true monopolies are born. If you enjoyed this story, subscribe for more business and billionaire insights.